Okay, welcome back to our channel, guys. Thanks for tuning into today's video. Yesterday's video was the bullish outlook for Bitcoin. We're talking about the potential bottom, we're talking about where we can bottom out and what will happen if we do. Today's video is going to be the opposite. We're going to be analyzing all the bearish data, talking about the downwards trend, talking about how low we can go and what will happen if we break our 9-year trend line. Before we get started and stuck into today's video, I want you to go ahead down to the comment section below, click the pinned comment and go ahead and join our crypto channel down over here. On Telegram, you can join it. We have all these updates, video updates, post updates, explanations, polls. You will not miss a thing if you join this channel. Furthermore, if you're interested in VIP channel, we got our VIP channel, of course. You can contact me via the link in the description. Of course, also in the Crypto Signal channel, you can contact me. We've got our details over here that you can find, and all of our results you can find in the channel as well. You can see from February to May, we've had significant profits every single month, and we've been on top of the market the entire time. So if you're interested, go ahead and contact me. Let's go ahead and dive right into this video. So like we just said, yesterday's video was more about that bullish outlook. Today's video is going to be more about the bearish outlook. And I need to kind of like overlay, or I guess set the grounds for the discussion today before we get into it. I need to kind of set the scene a little bit, because according to this chart, we have bottomed out. And that doesn't mean I think we have bottomed out. All it's saying is, according to this chart, we have bottomed out. And if we're going off the chart data alone, according to this chart, that is the case. There are other charts that we can use to suggest we could be going lower. But in terms of historic price action for Bitcoin, a chart that represents 9+ years of price action is going to be a little bit more reliable than a chart that shows 1 year or 6 months or 3 months. And therefore, this is why we're holding this chart to a higher degree of significance than probably most people would like to hear, or most people would be comfortable hearing. So that is where we stand with this one. Now, I just want to reiterate that I don't think we've bottomed out because of the macroeconomic environment. But if we do bottom out, I believe we have a chance of bottoming out here at $18,000. And I wouldn't be surprised if this is the bottom, because it has indicated the bottom 3 separate occasions, or 2 separate occasions now. Okay, so let's go ahead and lay the framework for, I guess, today's video, and talk about why the global economic scenario is not really, I would say, cultivating an environment where Bitcoin could really pump here. So we're going to go ahead and talk about that real quickly, just to lay the framework of today's video and then get into the analysis. So I talked a little bit about this in the other video I did, but I'm going to go ahead and briefly touch over it one more time, just getting rid of some of these drawings. But essentially what we have is we have 2 sections. I'm going to go ahead and draw them out again for you. We have the connection of correlation between inflation and interest. So this is one correlation. And then we have another correlation, which is between interest rates and the rest of the stuff over here, which is going to be a combination of cost of goods, the acquisition or sale of assets in terms of retail, as well as companies. So first and foremost, guys, we already know inflation over here has been rapidly increasing. Now, with rampant inflation, we do expect economic downturn. Of course, things become more expensive, cost of goods increase, you know, the value of the dollar starts decreasing, so your buying power decreases, and generally the economy takes a little bit of a hit, but there's less transaction occurring within the economy. So with the inflation increasing, obviously the response to that is interest rates are starting to rise. And we've seen that happen over the last few months, and we do expect that to continue to happen until about 2024, apparently. Now, I'm saying apparently because that is what we're being told. It's speculation as to whether or not it will continue until 2024, and we can't trust everything officials tell us, because we do know already they only tell us what we want, what they want us to hear, not what the truth is. So we have to take it with a grain of salt. When I say it's going to continue to 2024, we take that with a grain of salt. We're not entirely sure, but that is what we're being told. So with rising inflation, we have rising interest rates, and interest rates combat inflation, because inflation is caused, well, one of the main causes that we've seen from inflation is because we've had excessive printing of cash, right? We've excessively printed cash. We've had a tremendous amount of US dollars and dollars printed over the last 2 years over the recovery plan from COVID. Of course, with stimuluses and all these other budget improvements and all this other kind of stuff, we've printed a lot of cash, right? So what happens when cash increases? It alters our supply-demand demand balance, right? That interconnection between supply and demand, which kind of values everything in our market. So when we have an excessive amount of money printing, that alters that, and what it does, it devalues the dollar. So as the dollar devalues, $1 becomes worth less than $1, and therefore things cost more. That's one component of it. So how can we reverse that process? Well, we have to pay back some of that loan. We have to pay back some of that that interest on that debt, on that acquired or that printed money. So one scenario is that we increase interest rates, and that kind of reverses this process. It brings that demand back and decreases that supply. So we have that occurring at the moment. Interest rates are rising. Now, what does that actually result in? Well, it increases the interest on debt, of course. So first and foremost, interest repayments on debt increases. So if you have debt, whether it be short-term, whether it be like, some kind of cash app, or whether it be like a lay-by, or I'm not too sure what those popular apps are now, PayPass or something, I'm not too sure, I can't remember. Or whether it be a long-term debt, like a car loan, or whether it be even a longer-term debt, like a mortgage, your interest repayments are going to be increasing. Now, this affects companies and it affects households. So first and foremost, with households interest increasing on their debt, you have a combination where they have to now pay more towards that. They have less available cash. They have less available cash flow. And that is exacerbated by the fact that inflation is still pretty high, which means costs of goods are increasing, which everything costs more: fuel, gas, food, all that kind of stuff. And they sell their retail assets to fund that interest repayments. So retail are selling assets. They're not looking to purchase. They're not on a risk-on basis right now. They're not trying to accumulate. That's what's happening. Number two, the big one, and we've been warning for a few months, guys. We told you this way back in November, December, this was going to happen, and it's happening. It's been happening. Companies that acquired a hell of a lot of assets while interest rates were very, very low. All right, while they were low, they acquired a lot of assets that are cheap, so the interest repayments were low. What this did, it increased their future cash flows, so that future cash flows equals value. All right, their future cash flows equals their value, their valuation. All right, which the companies are based on future cash flow potential. That's how they value their stocks. That's how they value their companies. So they have more income producing assets at lower expenditure. All right, these are income producing assets. So what happens now is when interest rates are rising, they have to now increase their repayments to these debts, to these debt obligations. And what needs to happen there? Well, they need to either sell off some of their assets or increase their revenue. And they can't increase their revenue when cost of goods are rising and all this other stuff, bad stuff's going on, where available household cash flow decreases, less people are purchasing, the economy is moving less. They have to start selling off their assets to increase their cash flows, to repay these debts, to keep their future cash flows looking, decent, looking healthy, so the company doesn't crash. And we're seeing this scenario now where companies are starting to sell off, retailers are selling off. There's been a lot of fear in the market. Now, let's kind of lay the groundwork. We have seen that happen, since here. We've seen that happen. We've seen how we've had this massive sell-off. The question is now, are we bottoming out? We've bottomed out here 3 times. So we've already talked about the answer to that question in yesterday's video. We're going to go ahead and talk now about, what actually will happen if we lose this level, because we've just identified that interest rates can continue to rise. What will happen if we lose a support line on the Bitcoin chart, which has acted as the bottom in 2 separate occasions, 2 separate bear cycles, not a coincidence. All right, it is a clear trend. So let's talk about that. First and foremost, let's go ahead and take a look at this chart over here. And we talked a lot about this chart in yesterday's video, talking about some potential short-term moves. We're going to zoom out and talk about, the broader macro. And before I do that, I do want to go ahead and get rid of all this. If you want to find out what these little annotations are, just go ahead and watch yesterday's video. It's all explained in that video. So what will happen if Bitcoin loses that 18 to 17,500 zone? So first and foremost, guys, massive hammer wick on the 3-day, which is incredibly good to see. We are closing above this downward trending resistance, which is nice to see, of course, and we could potentially move upwards. We talked about this yesterday. But the real blood will come again if we lose this level. This is a major level of support on Bitcoin chart. We can see it on 2 scenarios. If I go down over here, this support line is represented by these 2 red lines, not the gray zone. The distance between these 2 red lines is the same resistance which we are seeing over here, but in this gray zone. So if we do go ahead and lose this level, we are losing a major support, which is that 2017 all-time high, as well as that 20th to 30th of November area in 2020. acting as that bull market trigger. That's kind of where we started going parabolic. And I just want to go ahead and look at something. That's the 29th. The 29th of that date was over here. So if we go ahead and line that up on this chart, that was that all-time high kind of top area, which we broke above, and that's kind of where we triggered that run up. So if we come down and we lose this level, which we're currently retesting, if we go ahead and zoom in, we can see we are currently retesting. We had the hammer wick below, we bounced from 18K, we've pushed above, we're retesting. If we lose this level again, it's not going to look very good because we never really lose these all-time highs. It kind of provides some support for the most part on the Bitcoin charts. So let's go ahead and assume for today's video, we are assuming the bearish case scenario, we assume we're going to lose this level. So if we do lose this level, what can we expect? Well, moving down from here, the most optimal, almost clear support line is at $12,000. This is a very clear support over here, this range here, and finally the trigger at $12,000, very clear support. This is a very ideal level for Bitcoin to come down to reach if we do reach that level. The next level, of course, or slightly higher up, a weaker support, but a support nonetheless, is sitting around $14,000. So I would expect 14, 12K. If we lose 12K, how low can we go? Very obvious, guys, 10,000. So we do have this range over here. We have this upper, middle, and lower range. With the middle range, of course, the middle range is always the strongest. The middle range is acting as the strongest support within this downward move. So, like I said in yesterday's video, and like I've explained today, we have a few different overlapping ideas at the moment. Number one is, do we take the macro into consideration any further, or do we think the Bitcoin chart, this support line will invalidate or provide enough support to prevent it from going lower? That's one question, and that relies on, I guess, a few things. It relies on, number one, will Bitcoin de-peg from the global markets, for other financial risk markets? Number two, will interest rates actually continue to rise as we've been told they will continue to rise, or will we have some sort of relief from interest rates rising in next period? We don't really know. We don't really know for sure. We assume that they're going to continue. We don't really know though. I do think we're going to continue because we need to, and the economy needs that pullback. We need to have those interest rates rising. But what effect will that have on Bitcoin? So we are at a major critical turning point right now. I think, like I said, being overly bearish here is not smart because we have a lot of support. We have diagonal support, we have zone support, and we have horizontal support over here. We have three separate strong supports, not even weak supports, guys. These are very strong supports. If we lose very strong supports, they become very strong resistances. So if we lose this level and head down to $12,000, this now becomes an incredibly strong resistance. There's no saying how low Bitcoin can go, really. I can't really tell you. What I can tell you, it's not good for cryptocurrency. I hear a lot of people out there screaming, you know, we want Bitcoin to go 12,000, we want Bitcoin to go 10,000. You're an idiot for saying 18,000. You're this, you're that, you're this. But these are the same people that don't really understand the importance of this trend line. It is incredibly important that we hold this level, or we might see a further crash that could take a lot longer than expected to recover from. So, like I said in yesterday's video, I'm going to reiterate again today, do not have any directional bias. Do not have any directional bias. I had directional bias because I knew the trend was going down. I knew the trend was going. We talked to you for months. We showed you so many examples, so much data to support it. Yet, even here, people were telling me I was wrong. This whole way down, up until this crash here, I had people non-stop abusing me on YouTube, on Twitter, telling me I was wrong, telling me I had no clue what I was doing, no information. Like I said already, guys, people, the majority are usually wrong. It is simple as that, all right? At the top, people are overly euphoric. They're going to be screaming for 200K, 300K, 600K. There's literal people on Twitter who have thousands, tens of thousands, hundreds of thousands of followers who are screaming for $300,000, all right? They would have same people telling me I was wrong at this point. Now we're down here at support. I'm telling you exactly what I told you over here. It's exactly the same thing. Take your bias out of the market. Eliminate your bias. Look at the chart for what the chart is and open your eyes. We are at major resistance if we invert. We are at major support. Why would you expect to be overly bullish or bearish here? Depending on which way you flip the chart. You shouldn't. You just shouldn't. There's no illogical reason to why you should. The only logical reason to why you should assume this will break is because of the global economic environment, which we don't have confirmed. We do not have any confirmed information that interest rates will continue to rise at a rapid increasing rate like they are going to, besides the assumption that they should. All right, that is not enough data for me personally to invalidate a 9-year trend line. I don't care what people think. I didn't care what people thought up here. I didn't care what people thought over here. I didn't care what people thought over here. I'm going to look at the charts. I'm going to trust the charts. I'm going to hope the charts are right. If they're wrong, we have our invalidations. We have our targets. I'm not telling you to go all in. I'm definitely not telling you the bottom is in. I'm optimistic for downside, as I am very much aware of the economic environment. I'm aware of the potential for a downside crash, and we do have our lower targets, as we've talked about, if that happens, which are very strong buy zones. But I am also not, I guess, underplaying or underestimating the significance of what has actually occurred in the last 7 days. A lot of people are, I'm not. All right, guys, I'm always here to tell you the truth. I'm always here to give you most honest and unbiased and most objective opinions. I don't care what any people else is saying on Twitter. I don't care what others are saying. Like I said, I was a solo trader for, close to 7 years. I didn't look at Reddit. I didn't look at Twitter. I didn't look at YouTube. I didn't care what other people were saying. I did it myself. All right. I don't care what other people are saying now. I will continue to provide the analysis that I believe is the most fundamentally beneficial for us going forward. All right. So for now, expect, all right, a potential bottom. The bottom, of course, is not confirmed. It is not confirmed until we have a reversal. We haven't had a reversal yet, but expect that to potentially happen here. All right. Until we lose this level, you should be more bullish than bearish. You should be aware of the downside risk, be aware that we could go lower, but you shouldn't be overly bearish. All right. If we lose this trend line, there you go. You can hit your lower targets. You can aim for your lower targets. You can open massive shorts. You can go ahead and do that. All right. We have identified that. But until that happens, remain calm and collected, unemotional, unbiased, objective, and analytical when it comes to reviewing the financial markets. It is not a gambling machine. It is not a money printer, all right? It is a very dangerous place, and if you allow your emotions to get involved, you will lose. It is simple as that, okay? Stay safe, guys. I hope today's video has been entertaining, enjoyable, and beneficial. If you're interested in considering subscribing to the channel, we really appreciate it. Go ahead and click that subscribe button, share it with your friends, like down below, comment, let me know what you liked, what you know what you don't like. Of course, today we didn't have the video cam on today, but some days we just choose not to have the video on, so it's a little bit easier for me to smash it out talking like this. That being said, I'm going to go ahead and introduce Bitget. If you want to trade where I trade, go ahead and listen to the next snippet. I highly recommend this exchange, and even if you don't sign up with my referral link down below, I don't really care. It doesn't matter. I don't really care about that, but I would like you guys to sign up anyway, because 0.02% trading fees is just phenomenal, and we've had really good feedback from this exchange so far from other members who have joined. It is really a good exchange. All right, I'll catch you in the next video. Okay, guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up, and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say, for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to our reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video.